Hello guys, I hope you're okay. Let's start our analysis. Basically today what happened today, how the market ran and what were the opportunities and how we could trade. Just a recap of today's trades. It will help you to learn the future, how you can react to the market, how you can respond to the market according to how it runs. So let's start. As you know, there was a news today, Friday, and the news was bad news. The both news were negatives, heavily negatives. Employment and first news was especially the heavily negative news. This news did affect gold, although normally we are interested in dollar news, but CAD news can affect as well. So what happened at the news time? It's 1:30 p.m. UK time. The news was, and you can clearly see what's happening here. There was a clear rejection from the. These were the levels which I mentioned in my previous video as well. These are the levels. With the levels, they're not 100% accurate because there's 10 to 20 pips movement can be up or down. There could be a difference. Otherwise, what I want to highlight, especially in this video, what was the possible opportunity and how you could have benefited from it. Going to the lower time frame, as you can see it from this video, that smaller time frame, you can see at the time of news, there was a very good opportunity here. So this was very good opportunity. 1 minute candles is bullish. It closed bullish, broke this level, and the news was negative, so we expected the gold to go up to the upside. So from here to here, 1968 to 19. Let me move this video. 1973. So about 50 pips. Yeah, about 50 pips. So just say if you take not 50, just take 30 pips or 40 pips, or even 20 pips, that's fine. But what do you have to do basically? Take the large size here and capitalize as according to your risk management, and take first 20, 30 pips, and you are good to close the position. And you can take, if you want, you can close all of the or then open another one, depending on how you manage your risk, or just open two trades. It's hard to, especially market is running that far, it's hard to trade, close the trade as two trades at the same time. The point I want to make here is that this was this red level here. Yeah, this red level. So we expected the market. It was expected the market will reach this level, right? However, it didn't. That's why you take 20 or 30 pips and get out of the market. And as you can see that overall market structure is showing what? It's showing that market is probably go down in Forex. So this was a strong level. So if the market breaks this, then we expected the market to go to the upside. So uh, market came to this level, which was 1973.22 and 19.74. So nearly 10 pips different. So the way I suggest you trade, the way I trade is that if you, as soon as you take the profit before reaching to the levels, because sometimes market doesn't reach the quite exact to the level. So you take 10 or 20p before that, at least 10 or 50, 10 or 15 pips. But in any case, if you have a larger lot size, you just take very short. Let me go this to very within short time of time you take the profit. What I mean by that, you don't take many pips because market can reverse anytime. So let's go in 30 seconds. I'll show you in more detail. If hopefully I can say that. That's for me. Yeah, just 1 minute. Fifteen seconds. Even can go instead of 30 seconds. See here. Market broke this level. Yes. And 19, as I said, it's nearly 50 pip market went to the upside. You could have taken a trade here as soon as it broke the level. And look, the market went 50 pips, as I said before. Let's see what's any special thing to view around historical view where we can learn something. The market nearly come to this level. It's rejected from this level instead of coming to here. So let me mark these two levels. That's one. So see guys, that was a smaller time frame levels, which you can see that market just tested these levels in smaller time frame and reversed back. So that was the news trading, guys, for day. And if you can further want to look how the market we could have take further trades. All you have to do just look for the go for different. Let me see if there's an indicators available, and I'll see if I can. Oh, actually, let me put a template. All right. One more thing for learning purpose. You can see that there is the Asian high, and let's see where's the Asian high and Asian low was for today, and how the market played with that. So this was the Asian high, and this was the Asian low, right? And now, what happened? Market broke this Asian high as well. If the market broke Asian high, that means it's there's two reasons why it breaks. First, it's grabbing a liquidity, and it could be a fake breakout. And second, it's a real breakout because we had a news, so it just it was a fake breakout, but it's a quite a good move. You could still uh, get good pips. However, biggest fake breakout, you can just grab the market, grab the liquidity. You can see that market was to the downside. So in smaller time frame, you could see 15-minute or 30-minute confirmation, and you depending how you trade, you can and then you can take a sell trade. Even if you take half an hour confirmation, see there's a strong rejection, and you can take a sell trade from there. See here. So instead of putting a stop loss here, you could have put stop loss here with smaller risk. You could take a sell trade. And similarly from here, you could take a buy trade here as well. So that was some points to consider for today's trades. These were the important points which are good learning points. So I thought I shared with you. If you have any questions or any comments, if you want me to make some more videos with specific topics, please get in touch, and I'll make a comment, and I'll do that. Thank you very much. Have a good day. Good night. Bye-bye. Actually, one more thing. I was planning to do that. Although the video will be longer, but if you want to learn more, I want to share with you something else. which is Dixie. Basically, the market ran according to the movement of Dixie. So Dixie goes up, the gold goes down to downside and vice versa. So let's see, this is 1 hour chart. I mean, see this Dixie coming down, then to the upside, then down, up. Similarly, gold had similar movement. So Dixie went up, gold came down. And now the Dixie is coming down, so we expect the gold to come down. Also, one more thing. As you can see, there's a channel here. What does that channel shows? The market's pressure is to the downside. So ultimately, I expect the market come to the downside. And also you can see that this area has been tested, this order block. So I'm expecting in smaller time, the time frame, there was order block here. It just tested. Although we could expect market to go up, so market may not come back here now, for now at least. And then we can expect this movement to this level here. So that's the level the market can come up to. So that was another learning point. So I hope this is enough for today, and you have a good day, a good night. Thank you very much. Bye bye.